Hey there, everybody. Welcome back to another 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I'm your host, Dr. Michael LoPiano. Today, we have, another big day coming up. The market flexing its volatility muscles, the U.S. government flexing its economic discretionary muscles, and GME flexing its keep going up muscles. So that's our question for today. Are we still looking at an unfolding of this current bullish phase, this volatility phase of GME's pricing cycles? What is that going to look like in the immediate term? What can we expect from our price action, both stemming from this event we saw with respect to the tariff announcement and with respect to some of the underlying mechanics of our favorite and superest of stonk. So we're going to be looking at that today. Before we get started, hop over and address our gratitude. So first up, once again, today's video and newsletter is brought to you by Kurt Lusko, aka Short Fridays, as well as our monthly supporters, Det Scruffto, Ken Wedmerlin, and Not Medical Advice, who help offset some of my data expenses on a regular basis. Thank you to everyone who has contributed in the past and has contributed going forward, including a new member for coming up, Prince Jackson. So thank you very much for your support and appreciation, for comments, and very, very much appreciated. Okay, so I made this meme yesterday, which I like very much. Some people liked it, but right, this idea here, right, that maybe something, right, I always love to see, right, the finance folks, right, the CNBC, right, the finance media folks, whoever it is, you see this on, to tell you the truth, I have actually liked that CNN has had Kevin O'Leary come on, because like he just tells it directly how it is. I really like that clip of him going like, Trump should do 400% tariffs on China. Like they steal all our shit. Like, don't like. It was very interesting to see Trump basically go like, the only country that really super retaliated was China. So their tariffs are staying in place, but everybody else's tariffs, 90-day pause. And it then makes one think, which is not something that any major media personality or pundit or Twitter, whatever, or this senator or that senator, regardless of whatever you're looking at. No one said like, this is probably a long play on China. This is clearly for this purpose, and it doesn't really. I don't know. This is some kind of way to angle things this way. Didn't hear that prediction from anybody. So very interesting to see that be how this turned out. And maybe the thing is too, was this plan from the beginning? Was this all part of Trump's master plan and his 19-dimensional chess? Or did Trump want to see actually how nations would respond, different countries would respond, and then to basically go from there? So, maybe he has an exploratory mentality with this, or maybe, right, we have yet to see exactly what or who this whole tariff business is really about. So interested to see this keep going. But in any case, right, we massively exploded to the upside yesterday as a result of this 90-day tariff pause. So what are we looking at now, maybe in the broader market? Does this affect, right? You'll remember yesterday on GameStop in particular, I said, well, I don't necessarily think we're going to get a $25 breach and hold scenario. I think that's going to require a very large external event in order to do that. If we got something like that, then I thought a breach and hold was possible with respect to our $25 call wall. So I guess this is even really an open question for me. Was that enough of an external buying event to bring about a very significant breach and hold scenario this week? Yeah, that's my open question. Not sure about that. We'll have to see going forward. I think the answer will more or less play itself out today or into Friday if we see another leg up. I think if we see another big leg up today or tomorrow as a result of margin calls or settlement or something like that, then I think yes. But we'll take a look at our data and see if we can get some insight into that. Heading into today's trading. So market context wise, obviously looking at some continued volatility. right? Look, this is important to remember. Even when we see a big move back to the upside like this, and this is something that retail folks are, I should say, not specifically retail, but household, right? So household, which is just plow money into the S&P and then just sit on it. What these folks miss a lot, I mean, right, they don't even do TA, but besides technical analysis, what's kind of the basic technical analysis does not necessarily give you is, yes, momentum indicators and what's going on with the options market. And as we've seen, a continued sign that no, we're not really betting in terms of this downward move or this bearishness, despite the fact that we get these kind of hitchbacks here, is number one, our momentum indicators are not relenting. They're not coming back up. We're not seeing, when we move back up, it is not enough to trigger a significant pivot in momentum back to the upside. That being said, this does look kind of suspiciously like what we saw during COVID, but not quite seeing a big enough pivot in momentum after all of these days and weeks of selling to indicate that we're going to start, having a crazy bullish move back to the upside, right? So the price is shooting up and down like a hockey puck, but not necessarily that momentum is not quite there to indicate that the market as a whole is ready to start chugging back to the upside on a stable basis. And that's visible we always, right? First place I go is, okay, what does the options market look like? What do we look like in terms of our distribution of calls and puts, assuming, of course, that they are mostly trader long, which on SPY is usually the case. And we did come very close to moving out of this crazy perma volatility territory with 550. Like 550, volatility really starts to fall off. If we do have something else, some other kind of cross punch here that makes institutions go, okay, risk off, let's move back up, and we move above 550, well, then we could see some mass kind of repositioning into that. In fact, it may be a mass repositioning, could be something over the next, basically into April OPEX, could be something that begins to send us back into some more stable territory, could send us across 550. And you'll recall yesterday, I think I talked a bit about that once we had this, the April OPEX expiry, because we're still very put dominant. This isn't gone. It's lessened. It's not quite as ridiculously volatile and put dominant as we were for the past few days. April OPEX has softened notably, but this is still not risk off, no more danger territory. No way. But we could see, right? You can see how much this has come down versus that insane amount of put gecks we had yesterday, net put gecks. So look, traders, everybody's still positioned way out into, basically for every options expiry that there is, they're still positioned bearish. They're still positioned volatility, move to the downside, etc. However, if once we get this put gex expiring, once we get the this April expiry, off the books, that's going to be a lot of put gex that's going to come off the board, and that result could be a move to the upside. If that move to the upside when this put gex clears is big enough, right, and folks are feeling good enough about negotiations or about what's going on with tariffs and not terribly concerned about whatever's going on with China, which is something to be concerned about, then we might see the longer period move back to the upside and a kind of passing of this. It may look like the COVID dip. It may look something like that. And in fact, a lot of this dipping I think we saw was related to deleveraging or giving back basically COVID gains from COVID money printing, right? Something like that. Okay. So what did that mean for GME? Well, for GME, right, that only helped. Again, this was another situation where actually we were a bit muted on our move back. We got kind of hung up around that $25 call wall. If we look, right, you can see it doing its thing here, right? So move up, hit 25, come back down and come back, test 25 and move back down, and then shoot back up, shoot through 25 and then come back down, and then back to 25 and then back down and like down and like down. And then somebody right here, this to me looked like, okay, so then that's us then starting to approach that hedging zone, that 2450 hedging dead zone now from the other side. And so, okay, then we moved back up here. It looked like maybe there was a smaller kind of VWAP order that extended into the after hours. We did have a lot of dark pool buying, some pretty, in the millions after market close. So this may have been something VWAP related based on how we rode this 20-minute moving average here, basically into the after hours. That took us over $25. So pre-market here, we see ourselves, yeah, definitely back here. Oh, we're starting to get some asks over 25 again. So, maybe we flirt with moving back over 25 today, right? We're kind of that kind of open really close to 25. It leaves it as a genuine question mark. The options market maker obviously is still incentivized not to have that close over 25. But if there's potential to get a big move to the upside, get a bunch of options euphoria, get a bunch of contracts sold in the sort of up to 30 range, and then because now 26, 27, as we'll see, they're really starting to fill in. We might see kind of an up move today, maybe buttressed by some additional external buying off of this tariff announcement recovery thing, and then maybe Friday we get shorted back down towards 25 to keep that position as basically low value as possible for options dealers. We'll have to see. Yeah, right. Lots of dark pool buying yesterday. A couple really big orders that may have had to do with closing out. I mean, these are the right size to close out, say, an intraday short position, and they happen to come in at the closing price, but after like extended hours. Like these are much later. This is at 5, but everything came in at the closing price. So this was not a closing price trade, but the actual recorded price of this trade was the closing price for 136,000 shares. So, okay, so potentially, yes, we saw that. All right, how is this looking for potential continuation of our bullish uptrend? Well, we're seeing good things in terms of continuing to see some of this weird volatility in lending liquidity. So XRT shares outstanding still up, right? Richard Newton, of course, he did end up talking about this in his video yesterday. So go ahead and give this a peek if you hadn't had the chance yet. So, right, some of these, whenever we enter into these volatility cycles, or not all of them, but some of the bigger ones, the volatility phases. Yeah, I went back and looked over Richard's spreadsheet as well, which he's done a really great job compiling over these past few years. Yeah, XRT shares outstanding going up does correlate with these big price ups. So yeah, April of last year we had that, the sneeze we had that, but also, and he did point this out too in his video yesterday, we also had this in October and November. XRT shares available, shares outstanding went up. I think they got up to 9 million in early November. So seeing shares outstanding go up is in XRT tends to be, or at least in these instances, did correlate with a price up. So that's very interesting. And at the same time, right, this is another day where we saw, okay, yesterday, shares available to borrow, they went up overnight and then shot down to 100,000. And then midday, they got up to 1.5 million after this additional 3 million share, over 3 million share creation order. But then all of a sudden, per Interactive Brokers this morning, all the way down to 0 again, right? So this is the third time this week that we've gotten this low, the 0 or 100,000 range. So something is going on, right? These shares are being created and then redeemed, or actually they haven't been redeemed yet because the numbers went down to 8 million, but that only indicates that maybe 450,000 were redeemed. But I don't know, maybe are they going back and forth? Like what's going on here? These are becoming available for a short period of time in large numbers to be borrowed, but then all of them disappear and then they kind of come back on the tape. So actually, or I should say available to borrow. So we go over to the XRT chart here. Okay, so they're increasing again. We're still before market open here. They're at about 400,000. That's still on the lower side compared to what we've seen recently, but very interesting to see that going on. I would say generally that's the type of activity that is indicative of restricted liquidity on XRT, which is related as Richard's shown a lot of times, is very closely correlated with GME volatility as well. So yeah, we saw a similar kind of trend over in our shares available to borrow for GameStop. So midday shares available to borrow shot up to 3.3 million. That's not an all-time high, but that's still on the higher side. But then throughout the day, basically, once the Trump tariff, actually, this is what it was. Once the Trump tariff announcement pause came in, whoa, 1 million shares within about an hour, immediately disallowed from being borrowed. Overnight, we went down to 1.8 million. And now pre-market, we've only recovered back to about 2.6 million. So let's see if that's still the case now. Now we're down to 2.1. So very interesting again. Very interesting again. These are, I've not seen fluctuation like this in our shares available to borrow numbers. I think I started tracking these every day, and posting these in the newsletter back in November. They didn't fluctuate like this. I would only say on in episodes I've seen is when GME was very heavily shorted, did I see fluctuations like this, not on upward price action. So what could this mean? Well, it could mean that there are a lot of FTDs that need to be settled going back into February, maybe some in March. I guess the most important ones would be the ones in sort of mid to late February, maybe early March as well now, coming up on that, some deadlines for that. And so these shares are needed in a certain amount in order to be able to satisfy ETF FTDs, rather than seeing them be used to actually short the stock in any meaningful or sizable amount. So very interesting to see that going on. Some of this, right, if they can't, right, the implications here, why are we talking about this? Well, okay, yes, it generally means higher volatility, and higher volatility means a price up in GameStop. But it also means that if this can't be settled properly, if this doesn't, if they miss, if they, it's like musical chairs, right? You run around and there's musical chairs specifically because there's always one fewer chair, and there's always a chair. There's one fewer chair than there is for people. So somebody ends up not getting a chair. So when these deadlines come due, inevitably there's going to be some player that doesn't get a chair, that doesn't get to borrow shares in order to meet their settlement requirements. And the result of that is, hey, you got to settle. So they got to go out on the market. They got to buy shares. That can shoot up the price. If there are people who have short positions or swaps or something like that, that can result in a margin call. And then these can kind of compound. And that's when we get these very volatile, explosive movements to the upside as a part of, or I should say, parcel to the volatility price up that's occurring anyway. So keeping an eye on this is very important, and will be increasingly important going forward. But what's weird, I would say, about this as well, something a bit incongruous, is what occurred with our IV yesterday. So I would say what made sense, our IV has come down. It came down during the day. It came down into kind of the mid 80s-ish. It shot down at the open to about 90% in terms of 30-day IV composite on Schwab. It has come down substantially here on the 10-day IV30 mean. We can see that the areas that have come down quite a bit, actually, interestingly, April OPEX came down substantially. End of April came down. All of our expiries in May also have had their IV drastically reduced. June is still to the upper side. May 25th, is that right? Or is that June? No, that's June. June and July are still up. June, July, October, still up. But May, no. Curiously, I do not know why. So those sunk yesterday, and pre-market too, right? We sunk pretty drastically here, down below 75% composite, which I don't exactly understand how that is possible, given that our composite values per strike are, it's not until 2027 that we have IV at any of these expiries that is anywhere below there. So maybe it's something that got messed up with the calculation that has to do with the last OPEX or the last expiry in May, the last weekly in May, because it doesn't have a value yet. Maybe that messed it up somehow. I'm not sure. We did see some of this occur the last time that we moved into one of these volatility phases. So in early November, we had this day where weirdly, like, IV shot down in the pre-market before it was the 8th, pre-market on the 8th of November. it shot down to like 29%. And it perfectly inversed Chewy, which meant it had something likely to do with Chewy swap. So I don't know. Is there a weird swap thing going on in the background here? Not sure, but this weird gap down when now we should be seeing constricted liquidity. I mean, liquidity was higher yesterday for GameStop instantaneously, so it made sense to me that IV went down during the day. But to see it now, basically still here, kind of pre-market, I'm a bit curious and a bit suspect. I am interested to see what happens to it heading into our open. Yeah, because it's still down around, it's barely above 70. So, and that only happened, gosh, I guess that would have been at open of, yeah, that would have been at open of the overnight market. It shot down. Do not know why. Very curious, but thought I'd point that out. Okay, so interesting to see what's going on there. With that being said, if we take a look at our technicals, still pointing out, right? So I made this doodle the other day. Still looks like we're going to do this, right? Still looks like we had our deflection now off of this cluster of moving averages on our daily chart, and came down here, and we got our PMO cross. So we're going to move up. Then maybe we'll cool off for a little bit, kind of get our footing in this space on the daily chart. And then once we get our next PMO cross, which will be, right, so today we're going to get one as well. We're going to get the orange line, so that's PMO 35. So that's going to cross the signal line. So that's going to cross the blue 55 SMA. But then our next set of crosses is going to be when these two lines, so when the PMO 20 and the PMO 35 end up crossing the 0 line. So that'll be another bullish move. And then, of course, when the 55 later on, deeper down the line, crosses the 0 line, that's going to be another bullish indicator. And we do see when this occurs, right, we have pretty big moves to the upside. So what was really interesting last November was we actually had these. So our first one was when the 20 crossed the 35, and then they both crossed the 0 line together, and then they crossed the signal line, and the 55 signal line stayed above the 0 line. So all of that occurred roughly at the same time. So we had a really tight clustering of those crosses in early November, end of October, early November. We are looking at second cross here, and then these same types of crosses a little bit spread out now into probably the beginning of May. So we'll see how that continues to unfold. But yeah, we're going to get that cross today. Right here, right, we can see here's the 20 PMO 20, which crossed. Now it's moving up toward the 0 line, and we have today, sure enough, we're going to get the PMO 35 cross. So yeah, it looks like we're going to keep working up there to this. If you're a gap fill person, then you might be able to go, oh, look, a gap. So maybe we fill the gap, whatever that means or why that's significant. I don't know. You can trade on that for some. I don't know. There's something algorithmic going on there. I don't know exactly why that matters, but sure enough, there are lots of people who trade off gap fill theory, and it works. So maybe we have to fill the gap. I don't know, but it does look like we're going to be heading up into that 27 or 27.50 area. It looks like a near term target for us. Another bullish signal. Okay, so what are we looking at in terms of our options data? What's going to occur today, or what seems to be the case today? What based on the options market? What are people betting on? Really interesting trade came through. Actually, I think I forgot to post the screen, but I did put it on my Twitter account, so I will bring that up a little earlier this morning. Give you all a peek. Yeah, here we go. So I've got this very interesting trade. This is a risk reversal trade. So this is a very, very bullish trade. It's a multi-leg options trade. This trader went ahead and bought calls. So long calls. This trader's long calls for tomorrow at 23.50 in the money, right? That's apparent. That's Morningstar fair value. So that's actually a decent enough bet. I mean, it could be worth 0. It is slightly above max pain right now, but okay, that's the Morningstar fair value price. Put 659,000 into 4,000 contracts there. Also purchased another 4,000 contracts at $26. So that's really elevating our open interest there. And then sold an 4,018 puts and 4,021.50 puts. So a lot. That's a lot of money. And that's going to lose a lot of money if we don't actually end up having this big bull move up above 25. So this is a really big bet that we actually do take the more bullish scenario and then maybe run up into the 27, 26, 27 area. Essentially, this trade is not profitable at any point from today on if we are trading below $26. It's not even profitable in the 25s, just to point that out. So very big bet. Again, how big it is and what the risk profile is like, it depends on the trader and the size of their account, right? If this is a trader with $100 million in their account, this doesn't matter that much. If this is a trader with a couple mil in their account, this is pretty big. So interesting to point that out, that we do see a bet of that kind. That's mostly what's taking up the IV changes here, or I should say the OI changes. So 18 down there, expanded as a result of this trade. 2150 did 24 and 25. I think were mostly mixed. So this was just intraday put trading. This wasn't anybody taking a big short or long position with respect to these puts. 26 again, right? This is being expanded. There was a lot of trading in this area, but that's those 4,000 contracts from that risk reversal trade. Otherwise, some light profit taking, some smaller bets on movement up into the 25 to 30 bracket. Some mixed trading down at 20, I think. Going into next week at 21, we saw an interesting expansion of short puts at $21. So $21 puts are very short, so they are supportive in intraday hedging. I doubt we'll really see anything like that. So, but enjoy the premium friend, whoever that is. 29 mostly at the ask. 30 I think mostly. 30 a little bit mixed. 30 was mixed, but these $29 calls are mostly at the ask. So interesting. And then some profit taking as well, and some minor trades, minor bets on our what's looking to be our new trading range, above mostly 23, 25, and then kind of to the downside of 27. So interesting to point that out. Max Payne's still at $23. So again, right, the options market maker here is they're not making money off of this expiring above 25. Good to keep this in mind. Yeah, I mean, the way we're set up now, right now, gamma exposure values above 25 because we closed slightly above there. 26, 27, we got that new OI, especially at 26. Yeah, that's a meaningful position. We could, if we do stay up, if we do have enough external buying, if options activity is particularly heavy, if we kind of get a lot of call flow coming in, we could. That 26 position and the 27 above it are big enough now to kind of keep us in the 25 to 26 area, right? If we sort of shoot up into the 27 area and then kind of run out of steam between 27 27.50, we can come back down, sort of cool off, some profit taking, a little bit of shorting can move us back into the 26 25.50 area, and then we can, the market maker maybe can do something to try to get us as close to 25 as possible, so those $25 calls aren't super valuable. That can offset too, right? Max Payne can raise up today and tomorrow to get much closer to 25. If we really have some volatility in this upper area here, I think I've talked about this before, the options market will tend to be overly optimistic about this. We'll bet kind of, we'll target some out of the money strikes. OI will shift up the ladder like it is. It's actually shifted much farther up. We have a ton of calls at 30 for next week, but the market maker is probably very enthusiastic to collect as many $30 calls as possible on the short side of that trade. Yeah, so there's a decent chance that event that we saw yesterday, based on how things are looking in the options market, that could have been enough to take us into this upper bracket. We'll have to see if we get a continuation of this. Like I said, decent chance we move up to 27, 27.50. But we could also, if we don't, right, and the market maker goes, whoop, we're not ready for this. There is the liquidity to push us under 25, to really push that out of the money, and then get some selling back down here to 24 or 23.50 or something like that. This kind of composite position, 24, 23.50. Yeah. So keeping that in mind, right? That's a little, could break to the upside, could break to the downside. Yeah, don't have a crystal ball into that, but largely stable within these two ranges in this pathway. Like I said, I think maximal kind of extension, unless we get something totally nuts, which is maybe more next week or the week after or something like that in terms of where we have Chewy swaps coming up. So going to be looking, that's going to be the big question next week. What's going on with those Chewy swaps? Do we see some action there like we saw back in November? So yeah, maximal extension kind of up into the 27.50 area if we get a continuation of optimism based on, or closing out positions or FTDs or something like that based on yesterday's tariff announcement. Yeah, so I mean, definitely the signs are there. Continuation of our bullishness. Very curious about our IV, and we love to see that restricted liquidity on XRT as far as what that means for our bullishness. So looking good, but let's see how this continues to play out. Good luck with your trades, and let's go GME. We'll see you guys. Yeah, we'll see you guys tomorrow for our next video breakdown and for tomorrow's live stream. So take care. Thanks, guys.